looked at the numbers, the metrics to evaluate the financials of these public Bitcoin miners, and you have a lot of beautiful charts. So we'll just put up this one on Bitcoin production costs to begin with, and maybe tell us your insights of what we see here.
Yeah, so thank you. So this chart shows the electricity cost of mining 1 Bitcoin. So it's only based on the electricity prices of all the public miners and their machine efficiencies. So we see that, for example, Stronghold has a really low cost of production. It's because they have access to very, very cheap electricity and also uses relatively new and efficient machines. We see Bitfarms on the other spectrum here, relatively high cost compared to other miners because they have older and less efficient machines and doesn't have access to as cheap electricity as some of the other players.
You also look at the current monthly operating cash flow, and I see here Core Scientific, they have some of the highest current operating cash flows, which means that they can pay their bills.
Yeah, exactly. So the direct cost of mining 1 Bitcoin, which I showed in the previous chart, it's important, but this is the most important because right now it's about having cash flows to pay upcoming bills and to pay for upcoming investments in machines and infrastructure. And we see Core Scientific have really big cash flows compared to the other miners because they have the most miners up and running right now. And they also have a big hosting component to their business, which generates a lot of cash flows. So right now it's mostly about having the cash flow coming in each month to pay for bills. In 2021, during the bull market, miners could get away with just having big plans about future hash rate expansions. The current cash flows was not that important, but now we see a change because these miners get in a liquidity squeeze due to the fall in the Bitcoin price.
You also look at machine payments to operation cash flow. So the more cash flow you see, the fewer payments. So who's performing best here?
Yeah, so in this chart, the more you are to the right, the better. It shows the current operating cash flow relative to the remaining machine payments, and it's based on the current mining capabilities of the companies. So we see, for example, Marathon, if we aggregate their current cash flow, they still have 6 times higher machine payments this year than their aggregated cash flow, which is really, really high. But they have a lot of cash on their balance sheet, a lot of Bitcoin. They have a very liquid balance sheet compared to most of the other miners. But the downside is that they don't have the cash flow. So that means that they will have to sell most of their Bitcoin, and they will probably also need to raise additional capital to pay for these upcoming machine payments.
We actually have the chart on that as well, the quick ratio. So we see the balance sheets, and we see that Marathon is on top. So I guess they're going to have to make that decision whether or not to sell their Bitcoin or turn off machines.
They will not have to turn off the machines. Marathon's biggest problem is that they don't have enough machines turned on because they have expanded extremely fast, have a so high machine deliveries, but they have not been able to plug them in fast enough. So a lot of their machines are just sitting in storage and not generating any cash flow. And on top of that, they have a lot of new machines getting delivered throughout the year. So if they're not able to plug these machines in, yes, they will have to sell their Bitcoin. They will have to use their cash on their balance sheet to pay for these machine deliveries, or they can simply sell the machine contracts to other miners who actually are able to plug them in, who have the available rack space.
All right, and finally, we have a chart on the debt to equity ratio. We see that CleanSpark has the least debt relative to equity, and Stronghold has the most debt compared to equity. The disparity seems pretty high.
Yeah, and but the important thing here is that most of these miners are actually in a relatively good position. Only looking at their balance sheet, is their cash flows that is really that's the problem here, because in the mining industry, it's an extremely risky industry, so it should be mostly focused with equity. And we see that most of these miners have a very low debt to equity ratio compared to what is usually in other industries. But yeah, we see some companies like Stronghold, they have an extreme debt to equity ratio, which is even high in much less riskier industries. It's a result of their stock falling about 90% from its all-time high. So their equity is almost worth nothing by now.
So, Jaran, based on this, who will emerge from this bear market in a better position than most, and who is in the least healthy financial position?
I would say that Argo is in the best condition right now of all the miners, because they don't have that big upcoming machine payments, and they also have very low direct cost of mining Bitcoin. But it's a very small company. Of the bigger companies, I would say Riot Blockchain. And Core is also relatively strong because of their sheer size and their big absolute sizes of their cash flows. The weakest company in my analysis is Marathon, because they don't have enough operating cash flow to pay for their upcoming payments, so mining payments. So my guess is that they will have to sell their Bitcoin and probably sell the machine contracts.
Interesting. And earlier we had a story on Compass. They're in trouble. They can't pay their bills. They're losing a host facility. Does this just reflect the overall trouble that miners are having during this time?
I haven't looked that much into the Compass situation. I know that they're going into court, so we will see what happens there. But yeah, this is a time of chaos in the mining industry. We have seen chaos in the broader crypto market the last month, with some financial companies going under, like 3 Arrows Capital, Celsius. And we're now seeing these dynamics coming to the Bitcoin mining industry as well, where the companies that take the most risks, that were kind of the kings of the bull market, because in the bull market, everyone who take risk are geniuses. But now in the bear market, these companies go under one after one, and we will see the same in the Bitcoin mining industry.